The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, welcome to Winning in Retirement. I'm Brian Akers. Today with me, I have certified financial planner practitioner Jeff Akers. I'm Vice President of Akers Financial Group. Today's show that we have here on Winning in Retirement is called 7 Questions to Ask When Considering a Financial Advisor. So there's 7 questions to ask when considering a financial advisor, and today's show is dedicated to going over this information. If you miss any of this during the day, you can go to our website at akersfinancial.com, click on the radio tab, and listen to the show, parts of it or all of it, in case you miss a question or an answer that you want to hear again. All right, so today's show, we have a lot of information to cover. Jeff, are you ready?
I'm ready. It's going to be busy.
That's cool. Well, let's start with a hard question first. Ready? I'm going to ask the question, but I'm going to go ahead and answer it myself, and then you have to explain what I just answered. That sounds like a good deal, Jeff?
I'm not sure how good a deal that is for me, but I'll do it.
All right, so the radio show is Winning in Retirement. We want you to win in retirement, and we think you must have a coach to do this. That coach is a financial advisor, a financial planning advisor. Now, when we talk about this, our show is called 7 Questions to Ask When Considering a Financial Advisor. All right, let me go ahead with the first question. The very first question is, are you a fiduciary? And my answer is 100% yes. And the reason is because we're a certified financial planner, we're financial planners, and by doing financial planning, you must know the client inside and out. Jeff, can you explain the word fiduciary to where we all can explain it?
Yeah, when I think of fiduciary, that means do I have a duty as a financial advisor to have the client, your best interest at heart whenever I make a recommendation? So as a certified financial planner practitioner, the answer to that question is yes. I have a duty because of that designation that I must act in the best interest of a client. So if there's ever something where I'm making a recommendation about something and I could go one of 2 ways, and one way might be better for the client, but the other way might be better for me, I have to pick the way that's better for the client. And if there's going to be some benefit to me out of that, I need to explain to the client what that is. So as a fiduciary, I have a duty as a certified financial planner, also as an investment advisory representative, to have your best interest at heart and not just mine.
You use the words best interest, and what happens is that this has actually become a law called best interest, called Reg BI, and people that are giving financial advice, they're supposed to give it to you many, many times. They're supposed to give you this form called Reg BI, and even a customer, the CRS form has to be given to you at the beginning of any time you talk to someone. So if you call their line, you give us a call and talk to Akers Financial at 833-946-7384, or go to our website, akersfinancial.com. The first email you get from us will have these documents included. It's also on our webpage for you to look at. A Reg BI is something that probably started last summer officially, where it's in writing, and that's something that we've been using even before they made us. Right, Jeff?
That's right. Yeah, we were kind of doing it even before they forced us to do it. So you get this when we first meet you, the first time we talk with you. Anytime we open an account of any kind, we have to give it to you then. So when Brian said that you get it many times, he wasn't kidding. You will get this several times over the course of our relationship.
What's the opposite of fiduciary? What's the opposite, Jeff?
Oh, boy. I was going to say something mean, so I'm going to pull back from that a little bit. But it's when someone does not have the client's best interest at heart, which means that they might be thinking of themselves first. They think, okay, I think of a used car salesman, but if someone says, here's my recommendation, but the recommendation really just benefits that person giving the advice, well, they're not acting as a fiduciary. They are doing the opposite. They're looking out for themselves. So looking out for number one, that's what I would call the opposite of being a fiduciary.
Yeah. Now, in the industry, there is the stockbroker way of doing it, which is suitable. And then there's the fiduciary standard, which is new, but suitable is different than fiduciary. How would you try to explain that to a client, Jeff?
Yeah, suitable is I get information about you, and I know your net worth, I know your income, I know how old you are, those kinds of things. And then based on that information, I can have a list of recommendations that fit the criteria that you've given me. So I can say, well, you are suitable for this investment, and I put you into that investment. On the other hand, as a fiduciary, I still need the same information, but now I have to go through that list of possible investments and take another step and say which one of these is the best for you. Not just it's okay for you, but it's the best for you. So what investment fits you versus which investment do you fit into that I can put you into? So the fiduciary takes that extra step of making sure that the recommendation is in the client's best interest again.
Well, some of the tricks of the trade that you might want to know out there when you meet someone and they're going to talk to you about your finances, what you want to do is get their card and take a look at their card and see what that says. Now, sometimes the card will be one-sided with no disclosures at all, and typically that means that they're an insurance person. They only sell insurance products. They're not an investment advisory representative. They're not a registered stockbroker. And in all cases, they're not a fiduciary. When you talk about who you're working with, you need to know who you're working with. Now, over the years, they've added different things to our websites called Broker Check, where you can truly find out more about a person and how they're regulated, how they're licensed, where they're licensed. You can find out how long they've been working, where they've been working. You can find out the good and the bad of their history. And that's something that if you go onto any financial advisor's website, it'll be on that first page where you can hit Broker Check and go right in to find out information there. So knowing who you're working with is extremely important because I believe that there's a major difference when we're talking about financial advisor or someone that's going to be more of a salesperson selling you a product. So what you got to do is think about how can you win in retirement. Having the best possible coach that is treating you first, that is called a fiduciary. Now, being a CFP since 1991, it's been my lifelong goal to be that for my clients, to be that person that listens to their whole entire history and their future and try to figure out what they need to do, what is best for them. Yes, we got to look at a lot of investments and look at a lot of things. And yes, we do get paid at Akers Financial for doing our advice and offering the coaching and the planning. And we get paid in different ways, which we'll explain as we talk about the show today. But the idea is this. The financial advisor is someone who needs to ask you a lot of questions. They need to know about you and what's going on. All right, Jeff, I got a big question to ask you here. And that question is this. Jeff, do you specialize in working with any type of client? And how many clients does Akers Financial Group have?
All right. So as a company at Akers Financial Group, we specialize in working with folks who are in retirement, preparing for retirement, their families, and also their businesses. Sometimes we'll have someone who owns a business, and so we help them with things they can do for the business to benefit that owner, but also to benefit their employees. Now, preparing for retirement, you might think, oh, well, I'm in my 50s or my 60s. That's when I'm preparing for retirement. But in reality, it could be someone who's quite a bit younger and they want to get their financial house in order for their family. They may have gotten married, have young kids. They want to make sure that they're going to be taken care of. And so that's all part of the financial planning process that we assist with. We also work with families after a loved one has passed away, and we'll kind of help them through that claims process. We've had many times where folks hear about us, someone has passed away, and that's the first time we meet them, is to assist them with that process. And that can be a difficult time. It can be a confusing time, all the steps you have to take as you go through it. And so being back to that fiduciary, knowing that someone has your best interest in mind as they're advising you on what to do with all these choices that can be kind of confusing, that's where we come in. That's what we do, is to provide that kind of advice that's on your side. The second part of your question about how many clients do we have here at Akers Financial Group, It's right around 1,000 clients, and that might sound like a really big number. We have 3 advisors that work one-on-one with people a lot, so it's not that I have 1,000 clients, but the company as a whole has 1,000 clients or so. And so that will include folks that we're working with towards retirement. And I mentioned a business owner might have some employees, and if we're doing a retirement plan for that business, then those folks are our clients as well. So that's all different kinds of levels of kinds of clients. So you have anything to add to all that, Brian?
Oh, yeah. Got to add some more. So Akers Financial Group, we do have 4 CFPs that work at Akers Financial Group. We have associate financial paraplanners that support the financial advisors, operations department, and, of course, our frontline staff that's meets and greets and organizes everything that we do. A total of 18 people work at Akers Financial Group in our 2 offices. We do have offices in Lutherville, at the Heaver Plaza, which is right north of the York Road exit off of 695. And then we have the main headquarters in Harford County in Forest Hill. That office, we house many of our employees on a day-to-day basis. So by having those offices and all these people, we're able to not only start out helping you, we pride ourselves in being someone that's there to, working with you throughout all the years. So financial planning to us is not just a written plan and, oh, here it is, here's your book. It is an ongoing document. It's an ongoing relationship with a financial advisor that's your coach that guides you from where you are now to where you need to be. That takes time and life changes. You got to keep changing your planning. A fiduciary is someone that's going to look after you and take care of you. What do we specialize? Well, specialize means that you concentrate a lot in it, and that is getting people ready to retire and then helping them retire, stay retired all the way through life. Now, that does not mean we don't work with younger clients. It means that we actually can help those younger clients, just do the right thing, sort of check the right boxes, get them on that path to be able to win in retirement because we know what they need to have in the future there. So at Akers Financial Group, we want you to have a stress-free retirement. We want every day to seem like a Saturday. Your retirement income and investments and financial planning is taken care of by the team of advisors at Akers Financial Group. If this is the future you want, it's not too late. We can provide you that. Just give us a call at Akers Financial Group. Give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voicemail message, and Susan will call you back on Monday to schedule a phone meeting, virtual Zoom, or in-person meeting and with one of our team of advisors. Start planning your retirement now by calling 833-946-7384 or visit AkersFinancialGroup.com. What do they mean when they say free? We'll discuss this in the second quarter.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers, certified financial practitioner, and here with me today is Jeff Akers. Today's show is the show you've all been waiting for, and that is this. What are the questions to ask a financial advisor? Well, we're going to cover 7 questions that you need to ask a financial advisor, and then we're going to actually answer them on the air today. We've answered our first 2 questions, just getting rolling. What we're going to try to do is cover a couple topics each quarter. If you miss a quarter, you can go to our website at AkersFinancialGroup.com. How do you spell Akers, Jeff?
Akers. That is how we spell our name.
AkersFinancialGroup.com. You go there, you check the radio tab, and then what you'll find is the list of all the radio shows we've had in the last couple of years, and the most recent one should be there in a couple of days. Just go there and find out more information. All right, Jeff. Well, we've got a lot to cover, so we got to roll. Hope you're warmed up for the second quarter. You good?
Oh, yeah. Ready to go.
All right, that's awesome. All right, so the question coming in is this. What do they mean when they say free? Because if you're watching TV or a financial station or looking anywhere, the word of the year has been free. What do you think they mean by that, Jeff?
Well, they're going to give you something, and then they're not going to tell you how they really get paid from that something. That's what they mean by free. So finding out how someone gets paid is going to be important.
Well, the craziest thing is that in marketing, using the word free drives people to it. And to me, it's like free should make you say, well, what are they hiding? Where are the fees? Because there's no way a billion-dollar, multi-billion-dollar company works for free. I mean, how do they manage all that money without charging a fee? There has to be free fees, and they have to make money. I also believe in the industry that you'll find that they all make about the same amount of money. They just make it in different ways. So understanding how advisors, insurance agents, stockbrokers, these clearing firms, these large firms that are offering the free, how they make their money is extremely important for you, because I think you need to figure out what fits you, because you are the consumer of the financial advice. You need to know what you want so that you know what you can get. So how would you try to explain, when we really talk about free, Jeff, what's your thoughts on it?
Well, two things come to mind. One, you mentioned there's no free lunch. That's kind of an old saying that we're all familiar with. But the other one is you get what you pay for. And so when someone starts off with free, well, then it's really not worth very much if there's no cost to it. Things that are valuable have a cost to them. And so you want someone who's going to tell you, what I'm providing you has value, and here's the number. Here's what it costs. You know, It's not just free. I'm not going to give you shoddy advice because you're not paying for it. I'm going to give you good advice. I'm going to give you the right advice, and here's what it costs in order to get that advice or that recommendation for a type of investment. Mostly when we hear the word free, we're thinking about investments is what we hear that with a lot of times. And so you want to make sure you're getting the right investment, and that the right investment usually is not going to be the one that's the cheapest or free.
Right. So if they're offering you free trades, they're making their money off your trades. Whenever you buy a stock, they are making money on the bid and the ask of the buy and the sell. And they're making money every time you trade. That money, when you multiply it times billions, equals a lot of money being made by someone. There are still market makers out there, and they're designed digitally to handle the stock market and to do your trades for you. You're not paying the commission of a stockbroker when you do have it free, but you also are getting the pricing and whatever the market gives you, because you have to pay cost internally. And that's truly where part of the cost is. The other cost with larger firms, especially the ones that offer free, is the fact that they make their money off of the management of money, and they get payments from different firms for having so many millions or billions of dollars with them. And so their back office is paid that way. The hard part is that financial advisors are not a custodian. Financial advisors won't get any of that money. They don't make money that way. And so financial advisors have to charge their own way of handling it. So Jeff, how are you compensated when you meet and work with the client?
Well, I explain at least two ways, really three ways, that we're compensated. The first is through fees. We talked about the fiduciary, we talked about registered investment advisors, and as an IAR, I can charge a fee for advice. So in that case, there's a contract. We write down, here are the services I'm going to provide, the questions that I'm going to answer, and here's the cost for that. And so it's just contractual. Here's what it's going to be. The second kind of fee would be for money management. We shop for the best money managers out there, and we use them. And when we do, that money manager charges a fee, and we receive a part of that fee that they charge. Now, the nice thing about that relationship is if a money manager is not performing the way that we think they should, we get rid of that money manager and we find a new one. We're not stuck with one money manager, a type of money manager. So fees is kind of the first broad category. The second way that we might be compensated is through commission. And things that pay commissions might be a mutual fund, and that's disclosed in the prospectus. You can see that in there. Might be if it's insurance types of things, insurance companies pay us a commission. And so whenever we are selling one of those or we're going over it with you, we have to show you here's what the commission is for this particular product. So that you know exactly what it is that we're receiving from this business. And the last way that I tell folks is with referrals, because, just word of mouth is the best kind of marketing. And so we want to do a great job for you so that then you'll tell your friends and other people who might need us, you'll tell them about us, and we can start working with them as well. So those are the three ways that I talk about. I did have someone last week say that he loved making brisket, and I love barbecue. So I said, well, I'll take some brisket along the way too, if that's okay.
You have to split that with me, I believe, according to your contract. All right. So we're going to go back to the radio show. So winning in retirement is this. You want to win in retirement by having a financial advisor. So today we're covering 7 questions that you need to ask when considering a financial advisor. Now, at Akers Financial Group, we do things called discussion items, which means every meeting, once they become a client, or even in the second and third part of the promotion of the time we work together, what we actually do is have it written out, and under every investment, we have a line item that says how we're getting paid in writing every meeting with a client. And we've been doing this before they created these rules. Now, in the insurance industry, there was talk of having special rules a few years ago where you need to disclose your commission up front and have a client sign it. And then that really fizzled and didn't come back as a law, but we kept that also as a way of our practice to disclose what's going on. Financial advisors get paid for what they do. They do. Financial advisors offer incredible advice that help our clients be very successful in their financial planning and in their wealth accumulation and family design when it comes to working on legacy planning. There's a lot of great work done by financial advisors, and they will get paid. When we designed Akers Financial Group, we wanted to be different in many ways, but especially in the number one way is that when that client comes in, there is not one product the client has to buy for them to be a client. It is up to what the client needs and what they come in with to figure out where to start and what to do. It always equals financial planning. But that does not always mean we charge a planning fee. We don't charge a planning fee to everyone, only the ones that need a planning fee. If someone came in and they wanted us to invest some of the money and manage that money, if we're making a fee from that, we still provide the financial planning services. I've always struggled with charging both when it comes to having a client. Now, many people come in and we do have to charge a planning fee. That's on an annual basis. And then we end up managing money over time. And if we're managing money, typically we don't charge both sides of it. So as you set up a company, an independent company like Akers Financial Group, we're licensed in every way as stockbrokers, as investment advisor representatives. I'm licensed for auto and home P&C insurance. We have life, health, long-term care, disability insurance, a license to do that. And we're licensed in many states where our clients end up living in or moving to, or with all the digital world, we just get clients from around the country and some around the world, because you never know where people are going to live under the current circumstances. All right, so any last comments on the compensation, Jeff?
Yeah, well, it's just important to know from the person that you're working with how they get paid. They're not required by law all the time to tell you the dollar amount, but it's just good to know how they get paid. And just know whenever you've got a relationship, a professional relationship, there's going to be some form of compensation, and you need to know what it is. So make sure that you ask that question, how do you get paid?
All right, so if you go to some public seminars, what you'll find is a lot of them will say that it's free. And they'll say, just, you come meet with us, it's free. And then working it's free because the company pays me. What that means is that it's a commission, and that commission is typically through an insurance sale. The insurance sale does not come out of your money up front. It makes you have a surrender period. The longer the surrender period, the higher the commission. So know the products, know what you're doing. Make sure you understand the conflicts of interest involved when working with a financial person. Understand if they're an advisor, a financial planner, or are they a salesperson for some company or some product. So make sure you understand who you're working with. How they get compensated will really tell you what's going on, and understand where advice is going to be coming from. So make sure you know all this. Now, Akers Financial Group, we're local, we're independent. We don't report to a big company on Wall Street or even in Iowa. We report to you. We do have offices in Lutherville and Forest Hill. But when we set up financial advice and financial planning, it's all about you and about your retirement. We want you to be winning in retirement. So give us a call at Akers Financial Group to set up your free meeting. Yes, I said the word free for that first meeting. We give a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you leave us a voice message, and Susan will call you back on Monday to schedule an in-person meeting or a virtual Zoom with one of our team of advisors. Start planning for your retirement now. Call 833-946-7384 or visit AkersFinancialGroup.com. What is the difference between a salesperson and a financial advisor? We'll explain in the second half of the show.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to the second half of Winning in Retirement, where we want you to win in retirement. That might mean that you got to start now and build your investments and your financial portfolio so that you can win in the future. Or you're in retirement now and you want to know how to do better so you can feel like you're actually winning at this lifelong game of winning in retirement. Our show today is special because we have Jeff Akers with us. He's my cousin. He's also vice president of Akers Financial Group. Jeff, are you coming out of the locker room ready to go?
Oh, yeah, we got a lot to cover in the second half.
All right, so second half, we got to go quickly. Today, we're talking about the 7 questions to ask a financial advisor. This is a way to interview a financial advisor to know where they're coming from so that you can understand if they're a good fit for you. A financial advisor has to be a good fit for you to help guide you today and in the future. They shouldn't do one thing and then disappear on you. They should be there repeatedly and keep coming back and offering and taking care of everything for you. That's what a good financial advisor should do over a lifetime of giving financial advice. All right, Jeff, let's go ahead and get started on a couple different questions. Now, the tease coming into this half was, what is the difference between a salesperson and a financial advisor? What's your quick answer for that one?
Well, a salesperson has a product to sell. A financial advisor is going to listen to you and then figure out what you need. So are they product-based or are they client-based?
Yeah, so a couple tricks is that when you come into a financial person's office, you get their card, see if they have 2 sides to the card and disclosures. That would tell you if they're licensed for investments or not. The other trick would be is, do they listen to you for the first 10 to 20 minutes to find out about your life? Or is there sort of a sales talk that they do? Make sure you understand what's being involved so that you know that you're taken care of properly. All right, Jeff, an even tougher question. What experience do you have to navigate the complex world of financial planning?
Well, I've been in the financial planning field for over 20 years. Brian mentioned that earlier. And Brian's actually been in it for more than 30 years. He mentioned that as well, getting his CFP back in 1991, and he was working in the field before that. So over that time, a lot of things have happened. We've seen all kinds of economic environments and different law changes. If there's one constant in Washington, D.C., the constant is that there will be change in Washington, D.C. So Brian worked through the 90s, so through that tech stock explosion. We all remember that. If a company name had .com at the end, then it was going through the roof, and it didn't matter if it had any earnings or not. Let's say they called that irrational exuberance in the late 90s. Brian also saw the creation of the Roth IRA. Hopefully you've heard about a Roth IRA. It's a wonderful tool. We like to use it. And Brian was actually doing financial planning before the Roth IRA even existed. And so once it came into existence, that was something that he used. He saw the benefit of it and started using that for his clients to provide that tax-free income in retirement. Now, it was after the Roth IRA had already been created, but it was right about the time that tech bubble, remember the tech stock explosion of the 90s? Well, the tech bubble burst, and that's about the time that I started in the field. And then we went through 9/11, and there was the accounting scandals, and there's all kinds of trouble with the markets and with the economy as a whole. Then it was doing okay until we got to the Great Recession in 2008, 2009. And so I worked all through that and helped navigate through that for clients at that time as well. So we've seen a lot of different things happen, and the laws have been changing. We saw the estate tax exemption go from really low, like $690,000 for a person, to really high. It's like $11 million now, and they're talking about changing it again. So, we've seen a lot of things, and we know the things to keep track of. Now, in addition to the complexities of the financial planning world, I actually have a master's degree in marriage and family counseling. Now, Brian mentioned earlier that when you come in and sit down with someone, do they listen to you? Are they paying attention to what you need and what you're saying, what your goals are? And so I'm actually trained in listening. That's a good part of what that degree was for, and that's critical in the financial planning relationship. As a financial planner, I have to listen to what you have to say, what are your goals, and then find recommendations to match those goals, to take care of them. It's not a matter of you coming in and I let you tell your life story, but then at the end I say, and this is the thing that I was going to tell you at the beginning anyway. We don't work that way. We listen to you, we find out what you need, what do you want to have happen to win in retirement, what's that going to look like for you, and then we figure out what makes that happen. So I've got to listen to you, take some time to think through different possibilities, and then come back to you and say, here are some ideas. So Brian mentioned those discussion items. Usually in our second meeting, we'll have recommendations written out and explain this is what you want, and this is what we see that can match that goal that you have.
I don't know. I'm trying to think about that description you gave of me being a dinosaur, of actually walking the grounds of the earth before the Roth IRA. That's only 1998, so it's not that far. What we're talking about today in Winning in Retirement is 7 questions that you need to ask a financial advisor. These questions help you understand where they're coming from, what kind of advice, and if they're a good fit for you and your planning. Now, many people want to do things themselves. Now, doing it yourself is sort of like good and bad. We have helped many, many people each month to retire. We've been through it before. When you retire, it'll be your first time, and we want it to be your only time. Every professional athlete I know has their own coach to guide them to the next level and keep them at a peak. Financial coaching for financial planning, to me, makes perfect sense, no matter how successful you are. You'll actually find that the most successful people have coaching. The least successful get by. So make sure you understand what you're doing. This complex world means that things are always going to be changing to the future. Buying like an index and forgetting about your money cannot be your answer for the long run. Many people that tell me, I'm just going to buy an index, park my money there, must not have invested from 2000 to 2010 and experienced an entire decade of negative. That's what happened for a decade. That will happen again. Will it happen in the next decade? I don't know. Maybe we're at the beginning of a long-term boom, a bull market. Maybe we're not. There's a lot going on. A lot of things are changing. Many of those things are negative to a long-term market, or at least in the next 2 years. So a complex world is what we've worked with clients. We've helped them be able to get through it by having certain ways of managing their money, which we're going to cover later. All right, Jeff, let me just ask you a little quick question about all the services that we can provide for the clients.
Now, if I listed every single thing, that would take an entire show. But the primary service that we provide at Akers Financial Group is financial planning. Everything comes down to planning. We figure out what's the right thing to do, what are the best recommendations, and then we can help you use those recommendations. So some of the components of that financial plan include things like investments. We've talked a little bit about that, but we want to help you to use the right investments to meet your goals. Another component is insurance. Might be life insurance, might be health insurance. We are licensed life and health insurance agents. Disability insurance, long-term care insurance, and the list goes on. There's all kinds of insurance. Now, there is also property and casualty insurance, and we have folks that we work with to provide those services. We can look at it and make sure that you're properly protected. Taxes is another component. There is a tax business that's separate from Akers Financial Group that works in our office, and so we work closely with them. And if you already have a tax preparer, we'll work with that existing tax preparer. We want to optimize your tax situation. So we don't want you paying any more than what you must pay in taxes. But we also want to make sure that we're taking into account what's the future going to look like. Maybe we pay some tax now and we avoid paying taxes later when it would be a worse situation. And then estate planning. We talked a little bit about, we work with folks after a loved one has passed away. Well, preparing for that, if you're preparing your own estate, we understand the ins and outs of passing on your legacy to the folks that you want to benefit. And so we'll work closely with attorneys. If you have an attorney, that's fine, or we can recommend an attorney. But we want to help you rest easy that your legacy is secure. So, like I said, what I've gone through, it's not a comprehensive list, but that would be a whole lot longer. But if something touches on your financial life, then we can help you with it. That's kind of the rule of thumb to come back to.
Yeah, I guess the way I talk about it is that we want to do financial planning. We want to look at about 7 different areas. We want to start out with looking at where you are. We call that unique financial fingerprint. That unique fingerprint comprises of your balance sheet. Balance sheet is your assets and all your debts. Then we got to look at your cash flow, your budget now and your budget in retirement. We then got to look at estate planning, your wills, your power of attorney, your healthcare powers, things like that. And then we talk about retirement and design of retirement built around everything that you have and what you've worked for, from pensions to Social Security to saving to maximizing your savings. And then what we really try to do is talk about if you have kids that need to go to college or if you want to continue in college. The college planning is one of those pieces in financial planning. We have a niche for that too. And then we finish up with investment strategy and portfolio management design. And then we have insurance strategies and insurance, the follow-through on insurance legacy planning, which brings all those 7 pieces together. And ultimately, it all begins with your goals and where you are now. And we take that all the way through the planning process. And then we help someone implement what they're doing. And we follow through repeatedly to make sure it happens. A financial plan that's written down is not that good if it's not finished, not followed through, where you check off the boxes that you've finished. You want them all to be finished because you want to win in retirement. Because we all know the best thing about retirement is you get your time back. You get to decide how to use it. Before retirement, your time is tied up with other commitments, mainly your job. A lot of that goes away when you're retired. Your time is now consumed by what you want to do when you wake up. So to begin winning in retirement, give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a phone meeting or an in-person meeting with one of our team of advisors. Start planning for your retirement now. Give us a call at 833-946-7384 or visit AkersFinancialGroup.com. Remember, it's always your money that is being managed. We'll explain in the fourth quarter.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. Welcome to our fourth quarter of our show. I'm Brian Akers. Here with me today has been Jeff Akers. And today's topic has been 7 questions to ask a financial advisor, especially as you're getting ready to pick one and as you're investigating them, or if you're figuring out what kind of advisor you might have, you need to ask these questions. Yes, we've covered 5 questions so far. We got 2 more to go in the fourth quarter, so we got a lot to do. If you missed it, you can go to our website at akersfinancialgroup.com. If you go there, you hit the radio tab, and you can get a history of our past shows, and this show will be there for you to listen to bits and pieces of it. You can listen like a podcast or anywhere you are. All right, so head on to there. Jeff, you ready to go for the fourth quarter? We got this quick question for you. Remember, it's always your money that is being managed. Is that an important question?
Yes, it is. It is your money as the client. So sometimes people feel like when they talk to a financial advisor that the financial advisor treats it like, okay, now it's my money and I'm not going to give it back to you. So you need to do what I tell you with it. So just keep in mind, it is your money. You need to get these questions answered, make sure you know what your money is invested in, and go from there.
Absolutely. All right, so let's cover actually question number 6, and that is, where do you keep my money and how can I see it? So when I say this, how do you keep my money? So the client, they would asking this question, where do you keep my money? Well, we do not keep it in a safe in the back room. We don't run to the New York Stock Exchange and put cash into the market. What happens is your money is held at a custodian. These custodians, for us, are third parties. So as a stockbroker, we have a broker-dealer that tracks us and holds us to compliance standards, follows up on everything we're doing. But we still have to have something called a clearing firm. We use companies like National Financial Services, which is a part of Fidelity. We also use TD Ameritrade as our main two when it comes to a custodian or a clearing firm. These custodians hold the assets, but your money is actually in the actual asset, the mutual fund, the stock, things like that. So if a clearing firm, custodian firm, a financial advisor, or a broker-dealer would go under or anything horribly happen to them, your money's invested in what it's invested in. Now, whenever you hear horror stories, sort of like the Bernie Madoff, what happened there is the fact that there was no custodian that was a legal entity. It was Bernie's version of one. Now, he had a legit arm and a illegitimate part of his company. So the quick answer there is that if you have a custodian or clearing firm, they actually provide SIPC insurance for fraud. And so under the Bernie Madoff scenario, some people actually receive some payment for the fraud that occurred there because their clearing firm, under the legit clearing firm, has coverage. And usually that's up to $500,000 in most cases, or even higher, depending on the firms. So where is your money? Your money is with clearing firms, custodians. Now, if we invest money into fixed annuities, it's with the insurance company. It's never held by or Akers Financial Group in any way. It's always held by a separate third party. All checks that are investment are based on that. Any other checks are made payable to our RIA, a Registered Investment Advisory Firm, which is called Kalos Management, which is a national registered investment advisory firm where we charge financial planning fees, and that's also where we have fees for all the active management of money that we do, which we do for a lot of clients.
Yeah, I've had folks say, I need to make my Roth IRA contribution. I just make that check out to Akers Financial. And I'm like, no, you do not make it out to me. Checks are always made out to the custodian, or like Brian said, Kalos Management, if it's a financial planning type of agreement. So just keep that in mind. We don't accept checks that are made payable to us ever.
Yeah, exactly right. All right, we're going to move right into number 7. Number 7 is this, Jeff. Why don't you take it first? What is your investment philosophy, and how do we manage money at Akers Financial Group?
So the basic premise, in my mind, of our investment philosophy is we want to take as little risk as possible to meet your goals. So we never want to be forced to sell something at a loss in order to meet a predictable need. We might know you're going to need a car in a year. We don't want to go buy a growth stock and then have that growth stock go down and say, okay, well, now we don't have enough money to buy the car. We want to meet your goals. We want to do it wisely. And so we want to take as little risk as possible to meet those goals. Now, in those investments, we'll diversify across different asset types. And we like to use something called the endowment model. When you hear endowment, If you think of universities, colleges that have these big endowments and the way that they invest, the endowment model uses that as kind of a yardstick to say, okay, here's the way to invest in things. So the first thing is we want to establish that foundation with cash that's going to cover the short-term needs that you have. If you're retired and living on investments, then that number is going to be pretty big. If you're still working, then that number is a little smaller. But we want to make sure that we have enough to cover the immediate needs and some possible unexpected emergencies. And the amount that we have set aside for that's going to vary from person to person as well. Once we have that foundation laid, then depending on your situation, we might use a liquid investment or easily sold. When you hear me say liquid, that means it's easy to sell it. And it might be a risk investment, like using stocks, and we'll diversify those stocks very broadly. Now, we might use an illiquid investment, which is not easily sold. That might be a risk investment if we're looking for a dividend income and maybe some long-term growth out of that. Or we might use an illiquid protected investment, like fixed and fixed indexed annuities. And those will protect your money. We want some protection for things. Like I said, we never want to be forced to sell something at a loss. And it'll provide a guaranteed future income stream. Some folks need to live on their investments in retirement, and we want to make sure they're going to have enough money coming in month to month. That paycheck, where are those paychecks going to come from when you're not working for an employer anymore? So that's kind of the basic philosophy that I like to use, just to make sure that people have what they need. And once all your goals are met, then we can talk about what to do with any excess that you have at that point. But we want to make sure all your goals are met first.
Yeah, this advice sounds the opposite of what people are trying to do in the market the last 2 years, which is get rich as quick as possible by over-concentrating in certain stocks. And so this advice might seem counter to growing your money. The thing is this, is we want this money to last a lifetime. Your money cannot all be in one stock or in a couple stocks or in some type of cryptocurrency that has no real backing. What happens in financial planning is we want a plan that'll make it through all the good times and all the bad times. We want to be able to say, yes, you can retire and stay retired no matter what happens in the world, in the stock market, in interest rates and inflation, taxation, that your plan is going to work. And that's why the concept of the least amount of risk to reach your goal, where your rate of return, what's the minimum amount of rate of return we have to achieve for you to get there? We don't want to have all of our money at risk when we enter retirement. We want to have it well balanced. We want our protected side to be protected. And yes, since 9/11, we've been using fixed annuities. We use a lot of fixed annuities as a replacement to bonds. We shop and work and try to figure out what's the best annuity each and every month to see what fits for income or for growth when it comes to designing the portfolios. And yes, we manage money. Our managed portfolios do use gold and international investments. We do use U.S. stocks, large, small. We believe in dividend-paying stocks providing security on the downside. We want to have less risk than the market for our retirees. That's not the same thing as people that are saving money. When we're 10 years away from retirement or more, we want to go for it. We want to put your money in stocks. We want to diversify. We want to have our portions in the innovative industries and technology and be in all these areas. So the philosophy behind investing your money has to start with you and where you are. We want to achieve your goal, and as you enter retirement, we want to achieve it with the least amount of risks so that you know that check's coming next week. You know the check's going to keep coming, so you can start planning and doing things. That's what makes for a winning in retirement, where you don't have to fret or worry about those kind of things. You don't have to watch your investment portfolio 4 times a day just to make sure you got enough to pay the bill next month. Financial planning leads to winning in retirement. A great financial advisor is a coach for you, someone that's going to guide you personally through. They're going to be properly licensed. They're going to work through the right products. They'll explain how they get paid, and that will become a great relationship long term. They will formulate this relationship with you that will truly be something that helps throughout your life. And Jeff, I think you enjoy doing just that, right?
I do. And you mentioned before about not having all your money in one stock, and it just reminded me earlier talking about the accounting scandals in the early 2000s, Enron. Enron was a company that people had their 401ks invested in Enron, and then it turned out Enron didn't have any money behind it. And so those folks were in a pickle at that point because they had all their money in one stock, and that stock went under.
Absolutely, and that happens around. Back in the 90s and 2000s, what we've seen is some companies would actually only have their 401ks, only have their company stock as an option. That has changed through different fiduciary requirements of retirement planning. So things have changed a lot in the industry over the last 30 years, but something that shouldn't change. Your financial advisor needs to be someone that listens to you, understands what's going on in your personal life, and then puts it in writing on what we're going to do and how they get paid to provide it for you. Financial planning is a give and take relationship from both, and financial planning is something that we believe highly in. So Jeff, thank you very much for a good show. We want all of you to be winning in retirement by working with a good financial advisor. To do that, you can give us a call. We set up a free initial meeting, and in that meeting, we develop what we're going to do for people, and then you'll know what will happen in step 2, 3, and 4, depending on what's going on. So to schedule that free meeting, give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voicemail or voice message, and Susan will call you back on Monday to set up an in-person or virtual Zoom meeting with one of our team of advisors. Start planning for your retirement now by calling 833-946-7384 or visit AkersFinancialGroup.com. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on Winning in Retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment.